There is a concept frequently mentioned in the world of finance, smart money. When translated, it means intelligent money, but the idea goes far beyond intelligence. In financial markets, smart money usually refers to investors who have large amounts of capital, access to better information, and more advanced analytical tools. The term is commonly used to describe major investment funds, banks, hedge funds, and other institutional investors. These investors enter the market with very large amounts of capital, and many significant price movements are often influenced by their actions. For this reason, many traders and investors do not analyze the market by looking only at price charts. They also try to understand the behavior of large investors. One of the most common questions asked in the market is, what is smart money doing right now? Retail investors usually participate in the market with smaller amounts of capital. Institutional investors, on the other hand, can execute much larger trades. This allows them to have a greater impact on price movement. For example, if a large investment fund begins buying a particular asset aggressively, this activity can gradually push the price higher. Similarly, when large investors begin selling, strong selling pressure can appear in the market and prices may start to move downward. The concept of smart money is also closely related to market psychology. In financial markets, investors are often divided into two main groups. On one side are institutional investors with large amounts of capital, commonly referred to as smart money. On the other side are retail investors who trade with smaller amounts of money. According to some market theories, smart money tends to enter the market early. These investors may take positions before a major trend begins and prepare before large price movements occur. As the trend strengthens and the market starts attracting more attention, retail investors often begin joining the move. Because of this, some traders do not focus only on where the price is going. Instead, they ask another question: has smart money entered the market? However, smart money does not always act in a visible or obvious way. Large investors usually execute their trades carefully and gradually. If a very large order is placed directly in the open market all at once, it can move the price very quickly. For this reason, some large transactions may be executed through different strategies or through platforms such as dark pools. This is why experienced investors do not analyze markets by looking only at price direction. They also try to understand the behavior of large market participants, because sometimes price movements are not driven only by news or retail traders, but by much larger pools of capital. And these large pools of capital are often referred to as smart money. For this reason, some investors ask an important question in the market. Before asking where the price is going, where is smart money going? Because in many cases, the true force that moves the market is this large capital.